Many federal employees look to the C fund in their thrift savings plan for growth. This is a great core option as long as you understand how it affects your needs. In this video, we're going to look at the pros and cons of the C fund, visit the TSP website to get the facts, and show you how to position the C fund inside your TSP. Welcome. I'm Ed Smith, President of Valor Wealth Partners, where we're dedicated to educating federal employees on your complex and often underutilized benefits. When you're looking at the C fund inside your TSP, it's generally good to understand how this fits into the bigger picture. So to do this, let's take a little bit of education on indexes and the broader markets of investments. According to Morningstar, there are 10 different categories that fit into the U.S. equity markets. And the C fund fits into one of those, which is the large blend. If you want to look at a little bit more, we have a report in the notes section on the Morningstar category classifications. Take a look at it. There's a lot of information. It goes well beyond the U.S. stock market, talks about bonds and everything else. If you want to see how our opinion of this fits in, we actually have a video called the TSP Asset Allocation that we did a while back. Here's a link to it so you can actually take a look at this one as well. So when you're looking at the C fund and you're looking at the U.S. equity markets or stock markets, how does this fit in? Now, there's three general indexes on the U.S. stock market indexes that most people follow. First is the Dow. It's only 30 companies, again, 30 large companies, the blue companies or blue chip companies. These could be the names that you know and are very familiar with. The next index that some people follow is called NASDAQ. And this follows the NASDAQ exchange or the way stocks are traded. And this is generally on information technology companies and sometimes smaller companies or newer to the market. And the third and final is the Standard & Poor's 500 index. And this is where the C fund tries to mirror. It's the 500 largest companies in the U.S. And it's something that the S&P 500 and the C fund are very close as far as the numbers and rates of return. And we'll look at that a little bit more closely when we look at the TSP website to see how they match up. To get a little bit more information about the S&P 500, let's take a look at the last 25 years to see what's been happening. Now, in the last 25 years, the S&P 500 has performed a little bit better than 11% per year on an average basis. And this number comes actually right from the TSP website. We pulled the numbers and calculated off of that. On average, the S&P 500 goes all the way back to 1926. So this is 95 years of data, and the average return is 10% per year. So you can see it's doing about 1% better on an annual basis in the last 25 years. This is a lot. And when you look at the graph, this is how the S&P 500 has performed. Now, in the last 25 years, we've had two recessions, one back in 2000 and another one in 2007. And even with these two recessions, the S&P 500 has grown about 550% over the last 25 years. This is a great return. And this is why a lot of people love the C fund, because of the growth potential of the fund. But as you can see from this growth, there's also periods of massive loss. And if you're looking at the C fund, you have to be able to take the wins with the losses with this portfolio, because it is a long-term investment. And on the short term, you could have significant losses in your portfolio. So you have to be able to look at how it fits into the overall mix of your funds. To learn a little bit more, let's take a look at TSP.gov or the Thrift Savings Plan website so you can get the facts about the different funds. So let's go into learn about funds. All right, individual funds, and then we'll get rid of the G and the I because we really want to just focus on the C fund today. And then when we look at this, we see exactly what we've been talking about. Match the performance of the Standard & Poor's 500 or S&P 500 index. The performance has just been incredible. They've just done a really good job. Again, this is the index. It hasn't been that the TSP has done something overwhelming compared to the index. They're actually matching the index very well. And we'll see this a little bit more when we look at performance. But you can see year to date, 1 year, look at that, 42, almost 43%. And then lifetime, 11.31. Now, I did mention just over 11%. On the 25 years, it's about 11.1%. But this goes all the way out to 1988, so a little bit longer than that. Risk, medium risk. I think that actually should be a little bit higher. It is a U.S. equities portfolio, so there is a little bit more risk. I wouldn't normally classify this as medium. but they do. Total expenses, and we know the TSP funds are relatively low cost. So let's dig down a little bit more into what the C fund is. Why should I invest in the C fund? Again, the opportunity for gains. And as we've seen, these returns are really good, and it is a great place to have gains. Am I okay with market and inflation risk? Again, market risk is a lot of that volatility or the ups and downs. As you see that there's a lot of gains, but there's also some negatives that you have to be concerned with as well. And inflation risk, the cost of goods going up. How can I use the C fund in my TSP? And this is very important. Even on the TSP website, it says to diversify with using the C, the S, and the I, so you get to do some diversification in with the other stocks or equity funds. Now, this doesn't say that you shouldn't be using the G and the F, because most people's portfolios should have a mix between stocks and bonds. All right. When we look down again, average performance, we've seen this. Assets, $251 billion. Asset managers was BlackRock, now State Street as effective of April of 2021. And I already said the inception date since 1988. Now, here's something that's very interesting and something that may confuse people on what does it mean by the top 10 holdings. Now, when you look at the top 10 holdings, Google or Alphabet is named twice. Well, why does this happen? In the S&P 500, there's 500 companies. And it always stays true to 500 companies. But there's 505 different securities. And that's because 5 of those companies have 2 different share classes. In Google's example, they have a Class A and they have a Class C. So Google is actually, while it's only one company out of the 500, it's one of the only 5 companies that actually has 2 different share classes. And if it's in the top 10, that just shows you how much Google they actually have, that it made it in the top 10 twice. That is a lot of Google in your portfolio. I'm not saying Google is bad or good. I'm just saying they've got a lot of Google in this to make it in the top 10 holdings twice. So that's pretty something interesting to look at. Performance and risk, you can look at this, but we're going to go into a little bit more depth when we look specifically. Now, composition. This is talking about what is in the fund or how it's all made up. And when you're looking at this, one of the things you have to look at is that with the S&P 500 or with any index that's being mirrored with any of the funds in the TSP, you don't have a choice of saying, I don't like this company, or I don't want this company in there, or this type of company in your portfolio, because it's an index. You do not have a choice. So this is showing you where that makes it up. Sometimes people get very passionate about the investments that they have. And if you're just in the TSP, you're going to have the index, and you can't say, I don't like this one company for either social or whatever reason you have. This is what you have in the portfolio. Fees and more information, again, low cost. We know this with the TSP, and this is one of the best benefits that you have, although you can get the S&P 500 in a wide variety of different areas and a wide different things. So you get a little bit more description. All right. The next thing we want to do is go into the performance of the TSP to dig a little bit deeper and see how this works over different periods of time. Okay, jumping up here to fund performance, so we get a little bit more information. And we want to see rates of return. All right. Now, we want to get rid of all of these life cycle funds. We want to get rid of all of these other funds. We'll bring back the C. And what you can see is it also brings in the S&P 500 right next to the C fund, which is really good. So we can actually compare, because it's mirroring or matching the S&P 500 or doing its best to do that. We want to actually see how good of a job are they doing. Okay. Rates of return, as we talked about before, really good. Look how close they are to the S&P 500 in all of these different areas. They're really good. Now, in the short term, this is done very well, but it's also done good since inception. Again, just great numbers. Year to date, we're up there at 24%. Still really good numbers. All right. They have the different areas. Oh, you can see in September, it did have a negative. Again, ups and downs of the market. January, it also had a negative. Even with a 24% return, that doesn't mean every month is positive. And when you look at the different years, you can see that some years, not too bad, but they are negative. And then we also have, obviously, recessions, as we talked about before, 3 years in a row that it was negative. Okay, let's look at the graph. All right, when we look at the graph, what we're seeing here is a longer period of time since inception, and we see the S&P 500 is the lighter green, the C fund is the darker green. When we look at this, let's look at the 20-year or 20% difference. All right, so we had a 20% down in 2002, even though it was down a couple of times before that, a couple of years before that. The worst was under negative 20% 1 year, and then again down 36, almost 37% on another year. So you had 2 negative periods that were below 20%. Now, let's look on the exact opposite side of how many times it was above 20%. All right, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, almost 13, but this year we're going to hit 13. We're pretty close to the end of the year, so we're probably about 13 times. So 13 times above 20% and only 2 times it was negative 20%. And everything else in between. So when you're looking at this difference in the spread, you can see it outperforms or does better more years significantly than on the negative. But we still have to be worried about the negatives because that drastically can affect your portfolio, and you have to be concerned and having a good allocation prepared for a down year, hoping for a best year. So the growth on the C fund is undoubtedly one of the best funds you can be looking at. We still have the S and the I to look at a little bit more in other videos, but as you can see, the C fund has done a really good job over years. One of the biggest concerns that people have is looking at volatility. So this is looking at monthly returns. And as you can see, well, the top line or the annual line looks a lot more stable. That's not how life and how the C fund works. This is very erratic. You have a lot of ups and downs in the different markets. And that's not to say it's bad. But if you're looking on a short-term basis, you could actually be making too many moves because you're concerned or have emotional attachment to the investments. And so you have to have a longer-term nature when you are looking at the C fund because it is an extremely erratic or volatile fund on a short-term basis. So it's just something to be aware of. It's not bad or it's not good. It's just this is what happens, and you want to be able to make sure that you're preparing for yourself on your overall portfolio, not just in your TSP, but outside your TSP as well. Hopefully this has been pretty well. Let's get back and look at some other factors of the C fund inside your TSP. Going directly to the TSP website or TSP.gov is valuable information. And I really enjoy doing that in these videos because you're getting the true facts and not opinions about what is going on with your individual funds in the TSP. But when you're looking at the facts, you now have to start making decisions about what's best for you. And that's where you look at positioning the C fund inside your TSP. How much should you have? And the first thing you have to do is look at the risk that you have or you want to have in your portfolio, and you have to do a risk assessment. We provide a free one in the notes section. You can go to that link. It's a company we use called Riskalyze, and that will show you where your risk is on a scale of 1 to 100. There's plenty of different risk assessments out there, so find one that's good. But the first thing is figuring out how much of the C fund should you have in your portfolio. While you've seen the returns are really good, you also have had some very bad years. And so get the right allocation for you. The next area of positioning is looking at the traditional versus Roth and how much you should be having of each, or where you should be putting the C fund inside your TSP. You don't have a lot of flexibility or choices normally to be saying, do you want it on the traditional side or the Roth? But there are some ways to be able to do it. We have a video on TSP, Roth versus traditional. Take a look at it if you want to learn a little bit more about this subject. If you're still watching this video, hopefully you found this valuable today. So hit that like button so we know to create more content like this. And as always, we enjoy the comments, good or bad, so we know what we're doing and how we can be able to address these situations for you. In summary, the TSP C fund is a great core portfolio or great fund for you. But you have to be able to know how to position it both in the allocation or how much to have, and if you should be using it into the Roth or the traditional components. These are very big questions to be able to answer, and only you have those answers, or working with your financial professional, they might be able to help you out as well. We want the best advice for you and your family, so please get unbiased, conflict-free advice. Thank you for your time today, and we look forward to educating you in the next video.